Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everybody, checking in on the tech sector, Apple and Facebook daily weekly time frame. So the tech sector is starting to see the first weakness that we've seen in quite some time, and it is noted by increasing bear volume. So we are seeing this key support. The low up the end of March was 52.33. And we are right at that level. 52.33 was a double low where the bulls bought the dip back on Tuesday. But here we are closing at the low of the day, and we're going to test this level again on Monday. If we break 52.33, we then start to form lower lows. And then from there, after 52.33, we're looking down at 52.07 and 51.97. We will lose, or actually we did just lose, the 50-day moving average support, the lower Bollinger Band. So this is the most significant pullback we have seen in the tech sector since the election. So this is now starting to see the normal healthy consolidation that we've been just waiting on, and the bulls have kept shaking it off. The weekly time frame, I personally thought we were going to start this pullback 3 weeks ago when we had our bearish reversal candlestick after seeing 6 green weeks in a row. We negated that, saw a new higher high. Now we're confirming the bearish reversal candlestick. We lost the exponential moving average supports for the first time since December, and we are looking down. Now you can see really, if you look at this chart, there's not a ton of support in the near term looking down, and that's because we ran straight to the upside 6 weeks in a row there. So we could pull back significantly and still be in a very strong uptrend. Really, we could pull back all the way to $50 or even the upper 40s and still be looking just fine because of how significant this bullish move is. But the weakness is creeping in here. The RSI is falling back below 70. Bearish MACD cross is going to begin following through next week. Bearish TCG cross is on the verge of these exponential moving averages, the 4 period over the 8 period to the downside. And it's a pretty bearish candlestick with the bears controlling the majority of the week with the close down at the low. So checking in on Apple, we're seeing that same weakness. The loss of the middle Bollinger Band for the first time in over 3 months was a red flag, and we are now rejecting from that level, unable to get back above it. Close at the low of the day on Friday for Apple, and we're looking down at 141.01 and 140.06. If we break 140.06, we see a lower low, and on the weekly time frame, first bearish reversal candlestick confirmed on the weekly time frame since all the way back from the election. So time and time again in all these videos I'm doing this weekend, I'm saying things haven't seen since the election, and that's because we've been in this extremely strong run-up, and now we're seeing the most significant consolidation since then. So we are seeing a loss of the 4-period exponential for the first time in many months. Now we have the 8-period exponential to be watching. We'll be keeping an eye on the bearish MACD cross, and volume is going to be very telling this week as well, although it's going to be a bit tricky because it was a holiday week last week, and we missed out on 20% of the volume. So we can compare these 2 weeks, and we see 105 million and 87 million. So if I were to tack on just, rough estimation, 20% more volume to that 87 million, we would be up seeing an increase in volume over last week. So that's a bit of an assumption, but it tells you that there is some pretty significant bear volume behind the week that we did see. So Facebook is seeing the same thing. Loss of the middle Bollinger Band for the first time in over 3 weeks or 3 months was a red flag. Upper wicks of profit taking now. These middle Bollinger Bands are going to be some key resistance to be watching on Apple and Facebook after that support held for so long. Facebook support is 131.81 and 138. Make that 138.81 and 138.77, then down to 137.60. So resistance on these names, the middle Bollinger Band is the test that the bulls have to get back over, and we'll be watching those levels. Same thing, first bearish reversal candlestick confirmed in 2017, losing the 4-period exponential. Still on the 8-period exponential, and we have a ways to go before a bearish MACD cross, and the RSI here is a pretty good indicator. The most significant pullback that we have seen in the past year for Facebook occurred when the RSI hit that 70 level, and here we are hitting that 70 level again and starting to pull back. So that's been a pretty decent indicator to be watching because the RSI does not get over that 70 level often on Facebook, whereas you look at Apple, and we've been above that 70 level for months. So we are seeing some weakness in the tech sector, and we were waiting patiently for the tech sector weakness to start to bring the market down, as it was really holding the market up in the meantime, but that is shifting. And the question now is, how much consolidation are we going to see? And volume will be our guide as to how significant this pullback is. I like to use volume as our prove it indicator, and also I refer to it as acceleration. So if we see increasing bearish volume on the way down, we know momentum is gaining to the downside. So that's one thing we will be keeping our eye on this coming week. Hope you have a great holiday weekend, and we will see you on Monday.